So NASDAQ compounds at 18% a year.
What is NASDAQ?
The NASDAQ is the NASDAQ 100, which is the top technology stocks in the United States. Right? We live in a world that tomorrow will be more digital than today, guaranteed. And so therefore, these stocks tend to generate the most performance. And we've talked about many of these names. That is all in the NASDAQ. So a little arbitrage is if you want to shorten your 7.8 years to 5.5 years, 6 years, buy the NASDAQ 100. It's an ETF.
Yeah.
Zero cost, easy. And then I would say, and then do 70% that, 30% crypto, and you don't have to care about anything.
Sure.
You're fine. Now, if you have a different risk tolerance, you can tweak those dials. Or if you are more risk averse, then you up your cash dial or some other more stable flow, whether it's gold. Although gold is still driven by debasement of currency. They're all the same thing. They're all driven by the same macro factors. But so yeah, similar kind of idea.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge.
Raoul Pal dives into crypto's future. Bitcoin speculation and stocks versus crypto. Let's uncover what really matters together. Watch now.
This is the risk reward that people don't understand. If you've got a time horizon, let's say the average drawdown in the S&P during a bear market is 25%.
A drawdown being a drop.
Crash.
A lot, yeah, a drop in prices. You're getting compensated 15% a year returns for that, at best. In Bitcoin, the average drawdown over the same period will be about 70%. But you're getting 150% return.
If you're on the winning side, though. If I buy it and I can sell it for a higher price.
Just hold it.
That's the key.
All of these are in a nice trend channel. They go up. So anybody can buy something and hold it long enough, it'll go up.
Well, let's look at housing. You can say the same thing about housing. 2008, housing crashed. Just hold it. I have too much debt. I'm underwater. My bank's taking it from me. People are buying Bitcoin with debt.
Yeah, I mean, that would
2020.
I would not recommend that. But housing's different because you can endlessly create more housing. And we have a demographic problem in housing that makes it more complicated. Demographic problem is, A, everyone's leaving the cities now. B, the generational gap. Nobody can afford the boomer houses. We don't have enough cheap housing for young people. People are relocating, moving around. So we've got a very interesting mismatch in real estate now that makes it more complicated than it used to be. All you have to do is dollar cost average.
What's that?
So dollar cost averaging is if you're young and you've got a bit of excess cash now, you've sold your income a little bit, as opposed to just chucking everything in, or you put your large sum in, you've saved up your 10 grand, but now you've got maybe $500 a month of free capital you want to put into your savings. So when you have these drawdowns, you're actually keep buying. And what happens is it lowers your average cost over time, and you get to new all-time highs in your portfolio much before the market did. So, for example, in the last crypto down cycle in 22, all I did was add as much as I could to my crypto. So I was at new all-time highs in my portfolio well before the market was, because I'd lowered my average entry. That compounds your profits over time incredibly.
And is there something psychological there where if you commit to the habit of just putting $500 in regardless of what happens,
you remove emotion.
You remove a bit of emotion from it.
And the emotion is the thing that people struggle with. If you're investing in things that are more volatile, you firstly understand that you will see larger drawdowns when markets go down. Usually they're all correlated. They all go down at the same time, all up at the same time. So you're going to do that. But if you tell yourself, that's an advantage for me because I can buy more, that's a secret hack that makes people fortunes. Compounding. This is Warren Buffett's thing.
I 100% agree with that.
More companies in a bear market than in a bull market because...
I agree. I will 100% agree with that part. I call it poop. Panic leads to overselling, leads to opportunity, leads to profit. So I am on board with that.
Michael Saylor's transformation into one of Bitcoin's loudest advocates began in August 2020, when he shocked Wall Street by directing $250 million of MicroStrategy's cash reserves into Bitcoin. At the time, he cited the weakening dollar and growing inflation risks as the catalyst for what he called a move into capital preservation. That initial purchase, then the largest by any publicly traded company, marked the start of a corporate strategy that would redefine both Saylor's career and MicroStrategy's identity. Within months, he doubled down with additional purchases, even raising funds through convertible debt to expand holdings past $1 billion. For Saylor, Bitcoin was not a speculative bet, but a scarce digital form of property he compared to Manhattan and cyberspace. His conviction only deepened as the company borrowed billions more, using structured finance to accumulate hundreds of thousands of coins. Despite market crashes and wild volatility, he never wavered, insisting that MicroStrategy would hold Bitcoin for a century if needed. By 2025, the firm, now rebranded as Strategy, controlled more than 2% of Bitcoin's fixed supply. Saylor's relentless approach inspired imitators, reshaped corporate treasury thinking, and cemented him as a pivotal figure in Bitcoin's institutional adoption.
But now, let's think about this just from a practical long-term perspective. Warren Buffett is arguably the best investor in the history of time. He has averaged about 19% a year over the course of his decades, making him a multi-billionaire. And so when we compare a 20% return from one of the top investors in the world versus, hey, Bitcoin is going to give you 100% a year, there's some sense of
By doing
something could be wrong.
nothing. So even if I'm wrong by 50%, you still outperform Buffett. To put it in perspective, Bitcoin since 2010 has done, I think it's about 90 million % returns. There's no asset in all human history that's ever generated as much wealth in the shortest period of time. And because it's not a random thing, it's actually a technology, it's a network model of technology. As more people use the network, and we see with Bitcoin, governments buying it and asset management firms buying it, everybody else, you have this network adoption model. And so what it creates is the same chart as Google or Amazon, all of these. It just goes up in a log trend over time with some volatility. So you've got a secular bull market, which means that over time prices go up for measurable, understandable reasons. And it happens to be the highest performing asset of all time.
There's one problem.
And it's volatile. The psychological thing you're dead right about, it's very hard when it falls 70%. Mm-hmm. I've gone through 3 of those. They're hard. Imagine how difficult to replicate what you've achieved in your amazing career is for the average person listening to this versus buying one thing in your Coinbase account, your Robinhood account, and doing nothing. There's no cost. It's not like buying a house, it's not like servicing all the stuff. There's no debt involved. There's nothing.
In theory, but theory isn't reality. How many people end up losing money when things go down? How many people panic, especially with Bitcoin? Because if we look at especially the early adopters of Bitcoin, who are those people? These are the people that, well, a lot of the average person is, I want to get rich. I want to get rich quick. I want to make money fast. Versus the average person who's buying the S&P 500, this is somebody who is, I want to invest and build wealth for the long term. It's a very different mindset.
If the average investor of this is 32 years old, and we said, no, you need to invest for the long run, they're never going to have a house. So their whole vision of their future selves is utterly destroyed.
But look, you said
so it becomes
Bitcoin,
a logical thing to actually take more risk. It's logical for them because they've got nothing to lose.
So Bitcoin, you're saying, is 145% a year.
Yeah, and in recent years, as the trend rate of adoption grows, it's probably down to about 100% a year. Let's call it that for easy math.
XRP's rally has hit a wall after a failed attempt to hold above the $3 mark, raising concerns that the token could retrace further toward the $2 zone. The recent breakout to $3.10 quickly reversed, proving to be a fakeout as bulls struggle to sustain momentum. On the daily chart, XRP has been tracing a descending triangle since its $3.66 peak, with the inability to reclaim $3 now highlighting growing downside risk. A drop to $2.70, $2.50, or even $2.06 remains possible if bearish pressure continues to build. Adding to the weakness, whale activity suggests large holders are trimming exposure. On-chain data reveals that wallets holding between 1 and 10 million XRP have shed more than 160 million tokens in recent weeks, unloading nearly $500 million worth of supply. At the same time, exchange reserves have climbed sharply, increasing available liquidity for potential selling. The XRP ledger's on-chain fundamentals also paint a bearish picture. Daily active addresses have fallen to near 21,000, down from over 50,000 in July, while new address growth has halved. This decline in user activity and adoption further erodes confidence, signaling that XRP's short-term outlook may remain under pressure. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoinzilla for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.